Hi everyone, welcome back to yet another video on Acing Accounting. Thank you for joining me today. We are continuing with our September 2022 accounting paper 2. So today we will be looking at your inventory valuation and VAT. So this is question 1, 30 minutes and 35 marks. So let's just get into the question. Question 1 says inventory valuation and VAT. Inventory valuation. Deborah Trader sells electric fans. The business is owned by Deb Fisher. The information relates to the financial year ended 30 April 2022. Now, the periodic inventory system and the first in, first out FIFO or FIFO method are used to value the stock of fans. So, what comes to mind here when they say periodic inventory system? Now, the cost of sales are calculated at the end of the year. And then what was bought first is to be sold out first. And then question 1.1.1, it says calculate the value for the financial year ended 30 April, your value of the closing stock, and your cost of sales. Okay, so looking at our information, you have your stock of electric fans on information A, where our opening balance was 330 units and at 79,200, and then we had purchases of electric fans during the year. We have month, units, unit cost, and the total amount. Now, when we look at our information C, D, and E, information C says 6 electric fans from the December 2021 batch with a total cost of 1,650 were used as prices in an advertising campaign. So you just take note of that. They said December 2021, you know that you're supposed to say -6 because they used 6. Just take note of that so that we can use such in the future. And then number D, it says 10 damaged fans from the February 2022 purchases were returned to the suppliers. A refund of the total cost was received. So here we returned 10. Now we left with 290. All right. And then E, it says electric fans are sold at a fixed cost of 425 each. The total sales amounted to 528,700. All right. And then getting to our answer book, we have 1.1.1 where we calculate our value of closing stock. And then our value of closing stock, how do we get it? We're given the number of units at the year end date, which is 30 April 2022. We're given 470 units. And how do you calculate that? Using the FIFO or FIFO method, I'm just going to say FIFO. So at the end, what we bought at last is what's supposed to be our closing stock, right? So on the February 2022, we have 290 units on hand, valued at a unit cost of 285. So it's 290 times 285 is 285 plus, because we have 470, so that simply means we have some stock from February and also stock from December. So how much stock do we have from December? If we have 290, remember that our stock has to make 470, but now we already have 290. So that simply means 180 units come from your December 2021. So you have 180, and the unit price in December, it was 275 times 275, and then you calculate the value of your closing stock. Let's see what we have. 290 times 285 plus 180 times 275, and I'm getting 132 150. 132 150, and that's your 5 marks. And then moving on, we're supposed to calculate the cost of sales. Remember, the cost of sales is equal to your opening balance plus your purchases minus returns minus closing balance. Alright. And then keep the formula in mind, and then we can be able to utilize it. And then our opening balance was 79,200. How much did we purchase? We purchased a total of 376,500. And then we returned 10 damaged fans, and they were from the February 2022 batch. So we are supposed to say 10 times 285 to find the cost, minus 10 times 285, or you can just simply calculate from there and get the exact amount. And then it's 10 times 285. So this is your opening balance, these are your purchases, then these are your returns, and then you also subtract your closing balance, which is 132,150. But there's a piece of information here, a number C. It says 6 electric fans from the December 2021 batch with a total cost of 1,650 were used as prices in an advertising campaign. So we're going to include these because it's not really a sale, but we used some stock. We utilized our inventory on activities that the business is using to advertise the same stock. Okay, so it's 1,650. So that is minus 1,650, and then you calculate all of these numbers, which is 79,200 plus 376,500 minus 10 times 285 minus 132,150, and lastly 1650. So my answer is 319,050. Okay, 319,050. Okay, so those are your cost of sales, full 6 marks. And then 1.1.2 says Deb is concerned about the sales and profitability. Now you calculate the average stock holding period in days. Okay, so your average stock holding period, it's half of your opening balance plus your closing balance over your cost of sales. Because they said in days, we're just gonna say times 365. It's very useful to remember these formulas. I'm just gonna erase it so that we have space for our numbers. Okay, so it's half of our opening stock, which was 79,200, plus our closing, which was just calculated 132,150, of our cost of sales, which is calculated 319,050 times 365 days. Okay, and then now you just get to calculate, put that in your calculator. It's half over 79,200 plus 132,150 over 319,050. Then you multiply by 365. Let's see what we get. 120,9. But you can just simply say 121. Yeah, just 121 days. And then the next question says, based on your findings, comment on whether she should be concerned or not. So looking at what they're selling what? Electric fans. All right. So these type of questions, they want you to think outside the box. As they're selling fans, now her average stock holding period is 121 days. Okay, and we know that we can't buy fans throughout the year, but we can only buy fans on warmer seasons, just like say spring and then summer. So let's just say sales will pick up, will increase, just to be formal, will increase during warmer seasons. Thus she should not be concerned. She shouldn't be concerned. I don't know about the formality of your answers, but this should not, if you want to be that formal in your answer. But I just love being basic and simple and informal. And then on the second one, if you're looking at a type of good, what type of good ferns are? They are non-perishable goods, so they don't spoil or something. They have a longer shelf life, so they have longer shelf life. It's non-perishable goods. Non-perishable goods are sold. Then you can conclude, because fans they don't rot, so she might as well just relax and let the sales play out. So she shouldn't get worried, and then you can conclude there. All right, and then now we go to VAT 1.2. Okay, so let's see what other information we have on VAT. All right, so it says here, Beeline Supplies is registered for VAT, and standard rate of 15% is applicable. The business is owned by Brenda Fazile, or Fazile, or whatever you want to say. And then required, calculate the amount payable to SARS in respect of VAT for the 2-month period ended 30 June 2022. And 1.2.2, it says Brenda negotiated with the supplier to provide her with the purchase invoice, although the actual purchase was for 30,000. Okay, so that's a different question. We'll look at it. Now let's just complete your 1.2.1. Okay, so information: the balance due by SARS on the 1st of June 2022 was 3,800. So SARS was owing the business 3,800. Okay. I think we left out the question. Sorry about that. It's 1.1.3. I really can't see the question now. Oh, okay. Let me just do this so you guys can see the question. I think this is the question. Is it? Oh no. Okay. Okay. Let's just continue on. Answer book. So 1.1.3, since I can't see the question, it says Deb wants to change to the weighted average method to calculate or to value the electric fans, as she feels that this will improve profitability. Comment on this proposal, provide 2 points. So the first thing that comes to mind when I'm dealing with such questions, when you want to change your weighted average method or to any other, or you want to change your FIFO stock valuation method to any other, what comes to mind first is that no, this is really unethical, because you might be trying to manipulate your financial statements. You might want to increase your profits and increase your image to the eyes of the investors. So this is really unethical to change the stock valuation method. Okay. And then the second one is that, let's say this year you're using your FIFO, and then the next year you're using a weighted average method. How are you going to compare your financial statements or your financial reports when you were using two different things? So it is difficult to compare financial reports or statements regarding information about just gonna say info about inventory. Oh, my English, inventory. Right, okay. So now we move swiftly to 1.2. And then 1.2 says calculate the amount payable to source in respect of VAT for the 2-month period VAT period. Okay. Now where's our question? Information. Trying to look here. Oh, there we go. Here's our information. So our information for 1.2, this is what we have. The balance due by source is 3,800. So the best way to calculate your VAT due to or by source is doing a tier count. I don't know if it's gonna work for you, but this is what I recommend. So this is your credit side, output plus. See, this arrow is going outside of the account. That's where your output goes. Then this, it's going inside the general ledger account. That's where your inputs go. That's just another simple trick you can use when you are confused. Okay, so where do my outputs go? Where do my inputs go? Okay. And then you go to your information, you read. Let me just move this page a little bit closer to our answer book. Cool. And then it says information B, VAT amount extracted from the records of June 2022. So you really don't need to calculate anything here. You're given the VAT amounts. You just simply need to fill in into your tier account. So these are sales. Now let's just identify what each and every amount is. Your total sales. So you made sales to people. This is supposed to be an output because you are supposed to pay this back to source, right? Because remember, let's say you're buying at any retail shop you're buying from. You are buying there, you're paying VAT. Okay, so now the shop is receiving your VAT that you paid. The shop has to pay back that VAT to source. So it is a liability to the shop because they have to pay it back to who? To source. Right, now total purchases of stock. Now it is the business that is purchasing stock. So they are actually paying source the VAT when they're purchasing stock from another VAT vendor. And then now it says discount received from suppliers. If they're receiving discount becomes an output. So it becomes an output because the other VAT vendor has decreased what they owe to source. Okay. And then now goods returned by debtors. Now if debtors bought goods and then they return them, which simply means that we now owe less to source. You're actually looking at a perspective as an opposite to your sales because these were the sales. Sales are output. Now when they return, it's supposed to be an input. Okay, so this increases what we owe to source. This decreases, increase, decrease. Now, we sold old equipment. So the sale of old equipment is supposed to be an output because they sold something and we we received some VAT that we have to pass over to SARS. And then goods taken by the owner for personal use, those are drawings. It becomes an output. And then bad debts recovered, that's an income. We received money and we have to pass that some of that to SARS, so it's gonna be an output. It's a plus plus plus. Now we move to our T account. And then on our T account, what we had in the plus, okay, so what we had first is a balance of 3,800, the balance brought down. So the balance breakdown, how do we get it? It's due by SARS. So the balance is due by SARS to us. So SARS owes us 3,800. Okay, and then we continue. Our total says it's 142,500. So it's our sales 142,500. And then you continue to the second one. It goes 86,100 input. So 86,100. And then you have 3,750 output. Okay, so we'll just say these are your purchases. I'm just gonna keep on scrolling until I get to the information. Now I have discount received. Okay, just gonna say discount received. How much was the discount? 3,750. Yeah, it is. Yeah, the discount of 3,750. And then it is now your goods returned. It's an input of 1,260. That is control 1,260. And then you have your sale of old equipment, 6,000. You can just say asset disposal here. Okay, and then we are done with this. Goods taken by the owner, those are drawings 1125. And then drawings 1125. And I think this is the last one. Yes, bad debts recovered of 540. So it's bad debts recovered 540. And then you can obviously see that your credit side is much bigger than your debit side. And then you calculate the total this side on your credit side, which is 142,500 plus 3,750 plus 6,000 plus 1,125 plus 5,400, and I'm getting 158,775. So it should be getting the same amount this side. And then you just take that and subtract your 3,800 minus 86,100 minus 1,260, and I'm getting your balance carried down should be 62,755. Okay, so let's recalculate that just to make sure. Okay, 6,000 1,125 540 and minus 3,800 minus 86,100 minus 1,260. Oh yes, still 62,755. Okay, and then 1.2.2, it says, as a senior manager, what would you say to Brenda regarding this transaction? Now we're going to read the transaction and let's find out what really happened here. So it says Brenda has negotiated with the supplier to provide her with the purchase invoice for 120, although the actual price was for 30,000. Alright, and then as a senior manager, what would you say to Brenda regarding this transaction? So, what's really happening here is that Brenda is talking to a supplier and says, "Give me an invoice that states $120." So this what Brenda is doing is saying she has paid more VAT than she was supposed to pay actually. So she is saying that she paid more VAT because if you could calculate 15% of 120,000, of course it is greater than 15% of 30,000. So Brenda wants to claim more VAT from SARS, and this is an act of fraud. So the first thing that comes to mind is that this is a fraudulent activity, and might result in prosecution or unemployment. Alright, and then the second one, this comes to the image of the business, how people see the business. This could negatively affect, okay, let's just say image of the business. I mean, people wouldn't really want to buy from a business where fraudulent activities are being done. So image of the business will be negatively affected. And that's it for your first question, your inventory valuation, and your VAT. So thank you so much for joining me today. Don't forget to subscribe, like, and share with your friends, family, schoolmates, or anyone who just needs help with accounting. I'm here to help you guys ace accounting until the end. Thank you so much once again for joining me tonight. I will